Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. I am still very bullish on Roku for the long term. Roku is at the forefront of the streaming revolution. I think it's part of the next industrial revolution in the near term.
I'm kinda obsessed.
There could be great buying opportunities to add cheap shares. In this video, I want to share my recent thoughts about Roku stock. Why is this stock not moving? Is this stock dead like some other Cathie Wood stocks, like Zoom?
Don't tell me this is Zoom bad.
I'm sorry, Gavin.
I will talk about some interesting bullish news related to Roku and talk about next week's earnings, of course.
There is a revolution that's underway in which we watch television, and Amazon is soon to launch its own video streaming device as soon as next month. All this streaming, according to the Wall Street Journal. It's a direct challenge to another system called Roku. The Roku, of course, also is the #1, apparently, streaming device, offering things like Netflix, Hulu, and the like. I asked Roku's chief executive, Cathie Wood, if he thought Amazon was a threat in a busy market.
We've been a leader in selling streaming players for 6 years now, and we've had product introductions from Google, several versions of Google TV, Chromecast, we've had several versions of Apple TV, so there's been a lot of competition in this space, and every year our usage has continued to grow. So last year we streamed 1.7 billion hours of content, and that was up from 1 billion hours the year before. And that's because these are large companies, but they're doing a lot of different things. We are focused just completely on the best streaming experience, the best value, and the most content. And that has really allowed us to be successful, and we think that formula is going to continue.
First, I will lay out both the bull-bear arguments about the stock. Bullish investors are enthusiastic about Roku's revenue potential from several fronts. Programmatic CTV ad sales. Roku's integration with third-party DSPs aims to capitalize on unsold ad inventory.
Programmatic advertising are the pipes that enable advertisers to place ads in digital environments using data-driven automation. In contrast to upfront negotiations where clients work with account teams to place their ads on linear television, in programmatic, all buying is done through a digital market that's accessible to advertisers through a demand-side platform, or DSP for short. Let's walk through the process of serving a programmatic ad on connected TV. Using a DSP, a media buyer will set up the parameters to launch a new CTV campaign. First, they'll select a target audience. This can be an age or gender demo, a purchase-based audience, a first-party data source like a CRM, or the buyer might even combine multiple data segments to create a custom audience. Next, the buyer chooses a geography for where they want their campaign to run. Finally, and most importantly, they'll choose a type of inventory they want to run on. There's a wide range of premium inventory that's available programmatically to meet every marketer's need. After making their selections and setting the campaign live, when the parameters the advertiser has set align to the signals being provided from publishers, a match is made and an ad is served. This is all possible because there are programmatic pipes in place to align the buyer's choices to the publisher's available inventory. While both have their own approach, programmatic and traditional TV buying have the same goal: to serve relevant ads to valuable audiences. And overall, programmatic allows for decision media, the ability to take the most premium canvas for advertising, a TV ad slot, and enhance the viewer's experience using data.
This should potentially drive significant revenue growth. Subscription revenue shares. Increased focus on subscription services will boost recurring revenues. Strategic initiatives taken by the company to simplify signups. Homepage monetization. Roku's home screen, with a substantial daily reach, will feature innovative ad units, enhancing monetization opportunities. CTV data revenue. The potential cessation of Vizio's third-party data sales could make Roku's data even more valuable. This could offer substantial revenue upside. Conversely, bearish investors highlight several risks. Competitive threats. Larger competitors like Google, Amazon, and gaming consoles from Microsoft Corp and Sony pose significant challenges to Roku's market share. Walmart's acquisition of Vizio concerns loom over Roku's OS, potentially losing shelf space if Walmart Incorporation integrates Vizio OS into its ONN TV brand. Post-acquisition, if Walmart doesn't want to sell Roku, other retailers like Costco will sell more, I'm sure. We have rising content cost. The high cost of original content, coupled with previous content impairments, raises concerns about Roku's profitability and strategic execution. Roku's strong strategic position in the over-the-top and connected TV ecosystems makes it a compelling investment. With 50% penetration in U.S. broadband homes, Roku is the largest streaming platform for films and TV content, offering attractive opportunities for advertisers. As the market leader in smart TV devices, Roku even has the added advantage of being able to market all of this content to people via Roku City and the homepage via which users get to all their favorite apps. And when a viewer is done with one title, there's thousands of other similar ones for them to choose from. Roku has even begun introducing single title channels for when viewers really just want to be with a particular show, and it's immaterial what specific episode it is. Roku just announced that Louise Pentland will join the company as Senior Vice President and General Counsel. Effective July 23rd, Pentland will report to Anthony Wood. Pentland joins Roku from the Walt Disney Company. Yay! Exciting! Where she has been Executive Vice President and Chief Counsel for Disney Experiences and Products. In this role, she oversees all legal and regulatory matters for the segment's businesses, which include its global theme park, destinations, cruise operations, and global consumer products operations, and e-commerce platform. We are delighted to welcome Louise to Roku's executive team, said Wood. Her extensive expertise in legal affairs, government relations, and corporate governance will be invaluable as we advance our mission to transform how the world watches TV and connects and enhances the entire TV ecosystem. I am thrilled to join Roku during such an exciting period and feel privileged to be part of a company at the forefront of the streaming revolution, said Pentland. Roku has always been a leader and innovator in smart TVs, and I am eager to contribute to the company's ambitious future goals in this role. Roku has had a tough year so far, falling by about 30% year to date, underperforming the NASDAQ 100, which gained over 20% over the same period. I expect revenue to come in at about $940 million for Q2, up about 21% compared to last year, while net losses are expected to narrow to about 40 cents per share. There are a couple of things that I have weighed Roku stock down this year. Roku's streaming service distribution business, which facilitates the subscription process for streaming services and earns commissions for the same, is seeing some headwinds as more streaming services, including Netflix, focus on selling more affordable, ad-supported plans as customers look for better value in a mixed economic environment. Moreover, Roku has to increasingly compete for advertising-related revenue with big technology players, including Netflix, Meta, and Alphabet in the video market. Roku is likely to see continued growth in its platform business, led by higher numbers of active users. For Q1 2024, Roku's total revenue rose 19% to $881 million, and gross profit rose 18% year over year to $394.4 million. Roku had 81.6 million active accounts globally as of the end of Q1 2024, up from 71.6 million at the end of Q1 2023. Engagement rates on Roku's platforms have also been trending higher. The company saw total streaming hours rise by 23% year over year during the last quarter, outpacing growth in total accounts. The Roku channel saw hours streamed rise by 66% year over year. This is helping Roku drive higher margin advertising revenue in the long run. That said, Roku's per user revenue growth for its platform business has been easing due to increased sales from international markets. ARPU stood at $40.60 for the last quarter, roughly flat compared to last year. I will be closely tracking Roku's cost management and cash flows for the quarter following the company's strong recent progress. In Q1, the company saw total operating expenses fall by 16% year over year, driven by workforce and office space reductions in 2023. The reason why Roku stock is not moving is because analysts believe Roku struggles to compete with heavyweights such as Netflix and Amazon for advertising dollars. That's just not true for Netflix. People watch Netflix through Roku TV. Roku is the operating platform most people are using. It has successful competing with Amazon Fire TV 4 years, and it's still the largest. Roku is at the precipice of being squeezed by the emergence of challengers on all flanks. One analyst said, if indeed Walmart is successful in acquiring Vizio, we would expect that their unrivaled relationship with the world's largest brands and their treasure trove of shopping data will also present a significant challenge to Roku's incumbency. This is the reason why Roku stock is not moving. It's because this Vizio deal is not done. A deal like this could take a year. So that's why I said we could face great buying opportunity for Roku stock. Overall, I believe that the risk to reward trade-off for Roku stock remains very positive at the current market price of about $61 per share. The stock trades at just around 2x forward revenue, which is considerably below levels of over 30x that it traded at its peak in 2021. The secular trend of ad dollars shifting away from linear television to digital video formats is likely to benefit Roku in the long run, while the improving cash flows are also likely to help the company's valuation. The decline comes amid heightened competition in the advertising markets, as well as expectations of slower sales growth from the high-margin platform business. However, I think the sell-off is overdone and the value of Roku stock at about $72 per share, which is about 15% ahead of the current stock price. That is why I'm still very bullish with Roku stock.